Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Mangalam and Nigel. Guys, hi. Morning.
Hi, morning. Over the weekend, we were hoping for some sort of de-escalation. Maybe oil prices come lower and all of that and stuff. We kickstart a new week, $111 per barrel on Brent, and the GIFT Nifty indicating a 100-point downtick.
That's right. Things in a bit of a tizzy this morning. It looks like a bit of a challenging session up ahead, but you can't rule out some hope, right? Hopefully, Trump, climbs down a little bit, which hasn't happened till now. And hopefully, we see some measures on the domestic front as well that could help that sliding rupee and boost up the economy a little bit. But otherwise, a bit of a challenge ahead.
Bit of a challenge because we're up. Friday oil prices were up 3.5%. They're up another percent this morning as we come in. So that's the backdrop. Let's just start with that, which is oil. $111 a barrel, 101 plus actually. So you may wonder what's happened is basically the fact that nothing has happened. And that is the reason why prices are up. The stalemate continues. It's neither peace nor war. So it's like a no man's land. Now, over the weekend, President Trump warned Iran that, and this was a Truth Social post, he said the clock is ticking. The fact that, well, if they don't come to the table and start negotiating and they better move fast, there won't be anything left of them. So more rhetoric, more sort of, over-the-top kind of comments, threats, whatever you want to call it. Time is of the essence. The post is up on your screen as I speak. Now, there were also reports which said that Trump's top aides have drafted plans for a return to military strikes if a deal can't be reached. I mean, this, even as we ended Friday's session, this was the fear as we went into the weekend, maybe the US the President Trump is going to flex one more and then we will see what happens. But so far it's not happened. It may happen anytime. In the UAE, just to sort of, close the loop on the situation there, in the UAE, drone strikes sparked a fire on the edge of a nuclear power plant on Sunday. Remember, Iran has said, well, it's not us. UAE said it's Iran. That back and forth continues. UAE, of course, called it an unprovoked terrorist attack. So, it's so far. By the way, there have been reports that countries like UAE, Saudi, etc., they've carried out strikes within Iran, which were so far not reported. It was looking like Iran was striking countries around in that Persian Gulf region for retaliation against US, using those countries as a base to attack Iran. But over the last 1 week or so, it's emerged that countries like Saudi, etc., have also carried out strikes. Well, Iranian Defense Ministry saying Iran stands fully ready to repel any attack. So there's more kind of that military element, at least a little bit more. And I think that's also the reason why prices are up a little bit. US equities, that's the other thing. They saw a leg down. So S&P was down about 1.2%. NASDAQ was down 1.5%. Remember, the S&P is, actually US equities broadly are up 10% on the year. That's great because they've had a fantastic 2025 and they started 2026 on a pretty good note. Nvidia will report numbers on Wednesday, and of course Walmart reports on Thursday. That is this week. The other big story was global bond yields, which actually all soared. And this is not exactly great news for equities. So look at the US, right? The 10-year was up 11 basis points. It ended at about 4.59%. It's the largest rise on the US 10-year in over a year. The 30-year in the US, 5.12%. 9 basis points higher. You look at the UK. UK 10-year ended 18 basis points higher. It's the highest since 2008. There are country-specific reasons for in UK, Prime Minister Starmer's position is being challenged, and the candidate is more expansionist in terms of his fiscal policy. The Japanese 30-year, that also surged to near 30-year highs. So a bunch of reasons. I'm not going into specifics there, but these are all large developed markets, and bond yields are surging, which sucks money away from other markets, other regions. Dollar index also saw a surge higher. That's on Friday. So about 0.48% up to about 99.30. It's not as if we needed that because, the rupee's been under pressure in any case. So we are at around 96 odd to the dollar. And of course, I put out a piece on Editors Roundtable as well. What is the street talking about? 5 steps which perhaps potentially we could see. We'll see. But, if the global backdrop does not change, and when I say global backdrop, I basically mean oil, if that does not change, the pressure is not going to go away on its own. Something will need to be done. The Nifty, by the way, on Friday failed to cross the 23,800 level on the upside. So, we ended slightly below it. The immediate resistance becomes Friday's high then, which is 23,839. And the support on the downside, if we stay below this level, below the 23,839 level, is 23,153, which is nothing but the gap zone. The last time around the market came to these levels. So started to come to these levels. So 23,839, 23,150 odd is the range broadly, but very, very near term. GIFT Nifty will give you a quick sense of how we likely to start. It's about 80, 90 odd points lower, at least with an hour, just less than an hour to go for the pre-open session. Nigel has walked across the wall with the futures and options positioning and how we are looking. Nigel, over to you.
Well, thanks for that, Prashant. I think we'll be lucky if we start off with a cut of only around 100 points. I think we're in for a deeper gash just to start with in today's trading session because the markets are in a bit of a tizzy. Geopolitical issues, they are weighing. As Trump has warned Iran, the clock is ticking. Crude oil prices remain elevated while the 10-year bond yields have spiked. And globally, as you mentioned, bond yields have spiked up as well. In summary, the troika that we look at, Brent, the yields, as well as the dollar index, they're not favoring the Indian markets this morning. And the street is awaiting some kind of measures to stabilize the Indian rupee, which has been sliding one way. The question is, when do we hear these measures? Because measures are due. Does it come in at 96, 97, 98? Or, is there a different plan in place? But some kind of stability in the Indian rupee, that's something that the equity markets are looking at very, very closely. In terms of flows, it was mixed. The DIs turned sellers, the FIs turned buyers as well. Maybe that was a bit of a one-off, so we'll have to see how this trend goes because the FIs largely have been sellers. But they went ahead and they bought in cash markets and they covered some shorts as well on index futures. So if you pull up that chart, you'll see there was a swing factor of close to around 9,000 contracts or thereabouts. And it was evident in Friday's trading session. There were some shorts that were covering out positions, and that's precisely what happened. So that's the covering that I'm talking about, close to 9,000 contracts in terms of a swing factor. The short positions continue at around that 88% odd mark. Now, if you look at it, the problem is, we are seeing signs of short covering. Because you pull up the FI chart on the short side, the number of contracts on the short side have come down by close to around 20,000 contracts approximately. While the clients, they are unwinding some positions on the long side as well. But that outsized bounce that we were hoping for, once the shorts start covering, that's actually missing. And that's a little bit disappointing because you have shorts in the system, you're hoping that they get squeezed out. Now they're unwinding some short position, but you're not seeing that outsized bounce, which is a bit of a worry. In terms of levels that we're looking at, we should look at the options data. 23,800 call, that's seeing aggressive writing. The premium has come down to approximately 100 rupees approximately. And those puts that were written in the previous trading session, they have actually unwound some positions. So in terms of levels, going by the call writing that we're seeing at higher levels, the 20 DMA that comes in at around 24,000 odd, that's a very, very stiff resistance mark that we're looking at. But on the downside, you'll be hoping that last week's low, in fact, holds out. That comes in at around 23,263 or thereabouts. So markets in a bit of a tizzy. We're in for a bit of a challenging trading session. We'll have to hear something on the global as well as on the domestic front because otherwise the markets are set to open up a bit on the back foot.
Take that point indeed. Markets are set to open up in the back foot and what takes place from there will be extremely crucial to track from here on as well. So good to get in Ed Yardeni, the president at Yardeni Research. Good morning, Ed. The interesting part is that the street was hoping for some sort of de-escalation given the sort of spike that we've seen in the US bond yields. Do you think they're now comfortable with the bond yields being higher above that 4.5 mark?
Well, I think that it's interesting to see that bond yields spiked up on Friday. That was the day that Fed Chair Kevin Warsh, the new Fed chair, it was his first day in office. And I think the concern in the bond market is that the Fed chair has been saying that he wants lower rates, which makes no sense in the current economic environment. And I think it's becoming increasingly clear that the bond market is pushing the Fed to move from its easing bias, not to a neutral bias, but to a tightening bias at the June meeting. And that will probably be followed by a rate hike at the July meeting. I think right now what we're seeing is the bond vigilantes are sort of taking control of the global bond market, waiting for central bankers to take the inflation problem more seriously.
And hi, morning, Prashant here. You think Kevin Walsh will be allowed to do this?
No, there's no way that he can be a lone dissenter. It's very, very unlikely that he will be a lone dissenter. He's going to have no choice but to join. I think a consensus at the FOMC has to be that the easing bias is long overdue to be replaced by not a neutral bias, but by a tightening bias. And I think he's just going to have to go along with the flow. Otherwise, he's going to look, it would be a terrible way to start as a Fed chair, dissenting from just about every other vote.
Yeah. The move in UK, Japan, these are idiosyncratic country-specific stuff, Ed, or is there a US read-through here as well? The yields which saw big moves.
Well, it's definitely a global bond market sell-off. Bond yields are going up around the world, particularly in developed countries with large deficits, combined large deficits with increasing concerns that the Strait of Hormuz is going to remain closed for longer. The longer it stays closed, the more the bond market's going to conclude that interest rates are going to have to be higher for longer. I'm really relatively comfortable with the bond yield in the U.S. being somewhere between 4.25% and 4.75%. There's a chance that it could get to 5%, which is where we were briefly in 2023. I think that would be an extraordinary buying opportunity. I do think that it's interesting to see that the price of oil has stayed around 100. I know it's about 111 on a Brent basis, but it's extraordinary. It's not even higher. And I suspect some of that is the fact that China's economy is not doing all that well. The latest data on China suggests that retail sales are extremely weak.
Hi, Ed. Good to see you. And Ed, the Indian markets have underperformed, but with this yield spiking and the kind of move you're seeing on the dollar index as well, flows to the emerging markets will be really, they'll desert us. What is your view on that? How do you see flows moving globally?
Well, the reality is the emerging market stock index, the ETFs, for example, the EEM and the EMXC, excluding China, they were very strong until last week when South Korea and Taiwan's indexes took a dive. Clearly, the emerging markets indexes, ETFs, have been pushed higher by the AI trade as seen in South Korea and Taiwan. And both of those look like they need to come to a rest here for a while. So the emerging markets overall as a asset class may underperform for a while. I think, look, it would actually be a healthy thing if the markets took a break here, and I think they will. And I'm talking about sort of a rest rather than an actual break in market indexes. We did have a pullback earlier this year. We could have another pullback into the summer, but I still think that once things settle out, we're still in a bull market in stocks in the U.S. and globally.
All right, a quick word on the U.S. market. You've got those levels bang on. In fact, the levels are coming sooner than what you were anticipating as well. Yeah. What's the outlook with regard to the S&P 500? You normally have a level out there. And a quick word on KOSPI. Everyone's talking about this earnings growth and the likes. Some are believing it's not very structural in nature. But still, that market's available at sub 10 times. Your view on the KOSPI as well as the U.S. markets. Please go ahead.
Yeah, good point. I mean, we've had an earnings-led melt-up is what I call it, which is a lot healthier than a valuation-led melt-up. It's more sustainable. But some people are already questioning just the validity of the earnings. Some of those earnings have actually been the AI companies having stakes in other AI companies and all those prices going up. So it kind of feeds on itself, and I think that's sort of a concern here. Well, last week I changed my number for the S&P 500 to 8,250 by the end of the year. Maybe I made a top, but I don't think so. I think the earnings are there to justify the market continuing to move higher. It did get up to 7,500 on Thursday. On Friday, it only sold off 1.2%. And here, all of a sudden, everybody's talking about the end of the world and all kinds of bond crashes and calamities. I think this will be a short-term buying opportunity again, particularly in the U.S. stock market.
Right. Just to carry forward what Prashant had spoken about with regards to what Kevin Walsh would be allowed to do or not, how does all of this unravel? Because the bond markets are saying a certain thing, the president's saying a certain thing, and amidst all of this, there is, the uncertainty around the war and geopolitics. How does all of this unravel according to you?
Well, Kevin Walsh is a very smart individual, and he knows markets, he understands markets, and I think he understands that what the bond markets are telling him is that he's actually got to pivot towards a hawkish stance. And if he does that, there's actually a better chance that bond yields will stop going up if the Fed takes over and acts responsibly with regards to inflation. No one wants to see a repeat of what happened in 2021, 2022, when the Fed was 3 to 6 months too late in tightening. And I think I won't be surprised. I mean, it's quite possible, and I won't be surprised if the Fed actually raises rates by a quarter at the June meeting, just to get the message across that they get it, that they're concerned about inflation. They want to take charge of it. They don't want to let the bond market do all the heavy lifting.
Okay, 8,200. That accounts on the S&P in terms of the target. Ed, that accounts for the Anthropic IPO, the OpenAI IPO. That is 8,200 post those mega IPOs or going into it?
Yeah, well, we're going to have some very exciting IPOs for sure, between SpaceX for sure.
Yeah.
I think that'll juice up the market quite a bit. I think it'll bring a lot of investors that maybe have been on the sidelines getting excited about the future. The future is exciting still, notwithstanding the short-term anxieties.
Absolutely. Well, it's been incredible. And, here's a stat, Ed. The S&P has added $30 trillion in value since ChatGPT came out. We talk about seminal moments, and we use that term around loosely. Well, I think that was a seminal moment, right? 30 trillion.
Yeah, well, Prashant, a trillion here, a trillion there. Before you know it, it's real money.
Thank you very much. Great speaking with you. Appreciate your time here. And it's always good speaking with you. We'll take a break. We're back. We are just a quick tease out of the interactions lined up. 8:35, the management of KEC International joins us to talk about the fourth quarter numbers. 9 o'clock, we have Rakesh Arora of GoIndiaStocks.com to discuss the trends in the metal space. 9:20, Sanjeev Prasad of Kotak Equities talks markets, talks with us. 9:35, Solar Industries Management with us on fourth quarter, but more importantly, the outlook. Medanta does the same at 9:45. Outlook in focus towards the end of the program. The management of Arvind joins us to discuss their earnings and the outlook going forward.
Welcome back. This is Bazaar Morning Call as we brace ourselves for what could be a tumultuous Monday. The GIFT Nifty indicating about 100 points on the downside with 111 on Brent right now. There are a lot of stocks which are on our radar, and as always, our team is with us here. CNBC-TV18's list of top stocks for the day. Let's start with Nigel, Tata Steel. How do the numbers look, Nigel?
Well, Tata Steel's numbers actually are good. The street was sniffing a good set of numbers, and that's precisely the case. Just to summarize it, the realizations improved across the board. You had better volumes in India on a year-on-year basis, and on a sequential basis, there were better volumes coming in from the Netherlands. And in addition to that, you had losses that reduced in UK. The absolute number is better than what we're working with, mildly so, but that goes down as a bit of a beat. The India business, well, more or less in line. Remember, it got the benefit of better realizations and input costs didn't spike as much as what was feared. So that's why you had, the EBITDA per ton that improved quite well, both on a sequential basis as well as a year-on-year basis. And it was around 200 rupees better than what we were working with. Moved to the European business, well, it turned profitable. They reported an EBITDA positive number of around $1 odd. We were working with a negative EBITDA number of around $5 per ton. And if you break it up, the Netherlands business, these numbers are in rupees per ton. Well, you have it improved. The Netherlands business improved on a year-on-year basis. On a sequential basis, some kind of tempering down. But the UK business, the losses are reducing, which is encouraging in itself. The cherry on the cake is they've gone ahead and they reduced debt a little bit as well by only around 1,500 crores. But the street likes it. So put everything together, the numbers look good. And for Q1 at least, the EBITDA per ton will improve. I'll chat with the management later today and we'll try to pull out some more details. But for the time being, going with a positive start for Tata Steel or a relative outperforming start. Moving to Sudarshan, Vodafone Idea. The fundraise has been announced, Sudarshan. Tell us more.
Good morning, Nice. So for Vodafone Idea, two parts. First, about the earnings. Operational numbers are not that bad. It has seen an improvement after several quarters. Revenue has seen a growth of 2.3% on a sequential basis. Even margin has come in over 43%. It's at 43.1% versus 42.6% last quarter. Average revenue per user, or say ARPU, has increased and it's done better than the peers. And it's up 1% sequentially to rupees 174. And also subscriber loss, that's just 0.1 million. That's the lowest loss that company has seen in last 6 years, or say FY20. Now the second part is the promoter infusion. So board has approved the issuance of convertible warrants worth rupees 4,730 crore and the price that it will be done at rupees 11 per warrant. So that is done at the discount to the current market price. Now, analysts say that promoter infusion is lower than expected, but what would be tracked very closely is debt fundraising. If it happens, that will be the bigger trigger for the stock. But as of now, the stock has seen a huge run-up over the last few weeks. So just on that basis, I'm going with mild red.
All right. So thanks very much for that. Well, I think let's move on and bring in Vivek now. Vivek, morning. Power grid in focus.
That's right. Good morning. Power grid, regulated entity, not too much moves the needles in terms of quarterly results. But despite that, it's been quite a bit of a miss as far as the Q4 numbers are concerned. On a consolidated basis, revenues down by almost 5%. Higher other expenses, close to 1,900 crore, versus just 1,280 crore on a year-on-year basis. And that dragged the EBITDA lower quite significantly. EBITDA down almost a little over 11.5%. Margins too contracting sequentially, 700 basis points dip on EBITDA margins. Profitability higher by 10%, but this is on account of remeasurement of deferred tax balances, and that actually aided the the PAT this time around. In terms of capex and capitalization, remember between Q3 and Q4, the company gave an upgraded and updated guidance for capex as well as capitalization. FY26 capex at 35,000 crore, capitalization at close to 25,000 crore. Today, 4 p.m., the analyst meet is there. The company will give the final updated number, as well as we will keep an eye out on what is the guidance. Now, another important thing that the company needs to give clarity on is, remember, the deferred tax assets on the book has been reduced by 3,200 crore. So that has gone ahead and impacted the P&L. So it will be important to await clarity from the management of this. But overall, a muted set of numbers, but capex and capitalization continues to remain strong.
All right. Capex and capitalization continue to remain strong. Nigel, Hind Copper and SAIL?
Well, Hind Copper and SAIL, both of them, actually, the numbers look quite good. But keep in mind, the stocks have seen a big run. Now, for Hindustan Copper, it was actually a record quarter that they reported. On the top line, on the EBITDA, as well as the profitability aspect. On the top line, the growth was close to around 58%. We know copper prices have been surging, so they are a direct beneficiary of that. The EBITDA number, the absolute number, was up by close to around 130% approximately. And margins, they were, as is doing well, we were heading towards that 50% odd mark. For the past quarter, it's at around 54% odd. So good set of numbers coming in from Hindustan Copper. The higher realizations have definitely offset the higher cost as well. In terms of valuations, well, it's not cheap, right? Because they did an EPS of less than 10 rupees in the past year. So trades at close to around 58 to around 60 times approximately. But Anand Rathi, one of the brokerages that covers it, they are expecting the EPS to nearly double to around 18 rupees. Yet the stock trades at around 32 times odd. So the only pure copper play, going with green on this one, the numbers look pretty okay. Moving to SAIL, well, those numbers, in fact, actually are better on an operational parameter. So they got the benefit of better realizations, and input costs weren't as much higher as feared, and even employee cost was actually lower. So the revenue number actually is a small miss because the sales volume is a little bit lower. But what made up for that was the realizations were better. So that's why the absolute EBITDA number was better than what we were working with. We were at around 4,100 crores. It came in at around 4,400 crores. The net profit number as well was better than expected, and the employee cost actually on a year-on-year basis was down by 19% because the manpower itself was lower, and also the productivity has improved out there. The calculated EBITDA per ton came in at more than 8,000 rupees. That's the highest we've seen in multiple quarters, and the net debt number came down. So these numbers look good. The problem is they're being ambitious yet again. Capex plan of 15,000 crores for the next year, and it only gets higher from year on. So the street will be a little bit cautious on their execution capabilities. Numbers good. Fear is, are they getting too aggressive? We'll keep an eye on SAIL going with a positive reaction. Moving to Vinny, she's here to tell us about Premier Energies. Hey Vinny, good morning.
Hi, good morning. So for Premier Energies, we're expecting green year as well. The company actually reported a very strong set of numbers in Q4 FY26. Strong execution is what we've seen. So revenue growth of 38%. Margins, yes, a contraction has come in here because raw material prices have gone up. But versus its peers, it still managed to hold on to its margins. 30% range is what it's in, 30.3% for Q4 FY26. Outlook will be key from here on in terms of margins. While the order book for the company is standing strong, cell production and cells as a segment for them, that's at 58% of the order book, which is higher margins. But they are expanding in BESS as well as ingot wafers. So how does that move in terms of margins? That will be key to watch out for. The company has guided for a capex plan of around 5,100 crores as a part of their overall broader capex plan. And they've also said that they will be raising some funds of around 5,000 crore up to 5,000 crore via various methods. Could be QIP, NCD. So we'll watch out for all of that as well. But as of now, good set of numbers. They have strong expansion plans that they've given up, they've spoken about in their con call as well. That will be key.
All right, Vinny, thanks a lot for that. Let's go across to Ekta. Ekta, Gland Pharma, how do those numbers look?
Well, yes, Gland Pharma actually came out with a very good set of numbers. The revenue was up over 20% on a year-on-year basis. And you had the EBITDA margins coming at around 29.4%, and the profit was healthy as well. Geographies, USA was up 24%, Europe was up 36%, India was up 28%. Their Cenexi arm was EBITDA positive despite a lower top line Q-on-Q. Guidance given by them, 12 to 13% growth in FY27 in constant currency. Ex-Cenexi, the margin guidance is 33 to 35%, which is a bit conservative according to analysts. And the next thing is the GLP-1 opportunity, which should be positive for Gland.
All right, take that point. So that's about Gland Pharma. But I'm looking at Delhivery. Reported their numbers post-market on Friday, and a very strong performance that has come by. 30% revenue growth, 2,850 crores on the top line is what the company is reported, and the operating leverage benefits obviously visible now. The margins expanded from 5.5% to 7.5%, leading to an EBITDA jump of nearly 80%. And the net profit obviously was flattish on a year-on-year basis, because that's because depreciation that has increased from what 142 crores all the way up to 183 crores. So that's a non-cash expense. The key segments of the company, both express and part truck logistics business, that actually did extremely well. 40% growth is what we saw in express. So as a result of which, this vertical did 38% overall revenue growth, with margins coming in at 7.9% versus 4.5%. Stocks done well from lows. Let's see whether that continues or not. But the overhang of fund selling on Delhivery always continues. With that, let's go across to Yash now. Yash is also joining us, and this one is on the numbers of ICICI Pru Life. Yash.
Well, over the weekend, there was, of course, this large announcement of Prudential PLC, deciding to acquire 75% stake in Bharti Life Insurance. That would be for a total of about 4,200 crore. The deal happens at about 1.8 times September 2005 embedded value. But this particular transaction is a big negative as far as ICICI Prudential Life Insurance is concerned, because what happens is the Prudential PLC owns about 22%, to be precise, 21.91% stake in ICICI Prudential, and as per the regulations, Prudential PLC can't be a promoter, which means it can't own more than 10% stake in two life insurance companies, which means if it has to do this transaction, it will have to reduce its stake to under 10% in ICICI Prudential Life Insurance. The company in its disclosure has said that they will reduce their holding in ICICI Prudential Life to under 10%. They will seek an appropriate time from the regulators to divest this excess of 12% in ICICI Prudential Life, which will be done possibly through block deals, and that value of divestment would be about 9,200 crore rupees worth of shares in ICICI Pru Life, and that is expected to remain as an overhang on the stock.
All right, it's a large one, right? So we'll see how that gets taken out or that gets monetized, if, when, etc. is, of course, a question mark at this point. Well, Indigo is the next one we want to focus on. Madhya is here for details. Madhya, morning.
So it's a major relief, for airlines, especially Indigo, that operates flights on the Delhi-Mumbai route. Why? Because Delhi also reduced the value-added tax on jet fuel from 25% to 7%, and Maharashtra also reduced a value-added tax from 18% to 7%. Mumbai and Delhi are the key aviation hubs, and VAT coming down to 7% significantly lowers jet fuel costs for carriers. Fuel accounts for nearly 35 to 40% of an airline's operating cost. And, as I said, airlines pay 25% in Delhi and 18% in Mumbai. Now, when that is cut down to 7%, it translates into huge savings for airlines. ATF in Mumbai was priced at nearly 98,200 per ton. That comes down to 89,000 per ton, saving roughly 9,000 per ton. In Delhi, ATF prices were earlier around 1,05,000 per ton, now down to 89,800 per ton, saving 15,000 per ton. Now, a typical Airbus A321 operating a Delhi-Mumbai flight burns roughly 4 tons of fuel. At older fuel prices, airlines were spending over 4 lakh rupees on fuel, just fuel on one such flight. With the VAT reductions now in place, airlines could save roughly 60,000 per flight in Delhi and about 36,000 per flight from Mumbai, purely on fuel costs.
Got it. Okay, all right. Thanks a lot for that, Madhya. Well, here's a quick recap of all the top stocks we covered. The ones with positive news flow: Tata Steel, Hindustan Copper, SAIL, Premier Energies, Gland Pharma, Delhivery, and Interglobe Aviation. While stocks with negative news flow include the likes of Vodafone Idea, Power Grid, as well as ICICI Pru Life. That's about all the equity market stocks that we're tracking. But let's go across to Manisha Gupta, who's here to tell us what's going on in the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices. We are holding about $111 a barrel right now. This is after statements coming in from the U.S. president saying Tehran is running out of time to secure an agreement. Iran media, in the meanwhile, is reporting that negotiations remain deadlocked and the U.S. is offering no tangible concessions. In addition to that, we also have seen Russia face biggest attack in a year from Ukraine. It also is about U.S.-China two-day summit ending without a concrete progress towards reopening the Strait of Hormuz. What the markets will watch out for in this week is going to be the U.S. Fed meeting minutes. That is going to be in focus. And then you have loads of data coming in from China as well. But while the crude oil prices are trading in the positive, you have gold, which is trading at a 6-week lows. Silver prices fell 8% on Friday, have started this week on a lower note. Copper fell 5% on Friday. It's trading 2% down in the Asian markets right now. So barring energy, most of the other commodities trading in the negative.
All right, Manisha, thank you very much for that. So it's a quick check as far as commodities are concerned. We'll take a break. We have the management of KEC International to discuss their fourth quarter numbers. Stay tuned, coming up. Welcome back. Were you with us here on CNBC-TV18? Well, just a quick look at the gift Nifty before we go any further. And I think the focus this morning is, of course, going to remain on what's happening with oil, which is spiking. And gift Nifty is down about 100. And, of course, what happens to the rupee as well. I mean, actually, the dollar index has remained all well-behaved. And people have been asking the question, wondering, well, the dollar's not going up. Why is the rupee going down? Well, you've got the dollar, which actually moved up to about 99, past 99 on Friday in the New York session. So at the margin, perhaps there is that element as well. We, of course, blew past 96 and ended just under 96 on Friday. 95.96 is where we finally left off at. Well, the management of KEC is with us. And let's just sort of bring in the management to talk about the numbers. Fourth quarter was impacted by a 450-odd crore rupee collection spillover. Margins fell about 80 basis points due to operating deleverage leading to a weaker than expected performance. Vimal Kejriwal is MD and CEO of the company. Mr. Kejriwal, good morning. Great to have you with us here. Thanks very much for joining us. So can you just sort of, before we get into the specifics, fourth quarter, just characterize that for us? Was this West Asia, headwinds, execution challenges? And of course, I mean, if you start by telling us, what's the expectation for FY27 revenue growth?
Well, let me just talk about Q4 first. I think we had, I'll say, 2 or 3 major challenges. One was obviously West Asia, and with 25% of our order book from West Asia, there has been a challenge, especially on the supply chain side. You know, whether it is steel supply or whether other material supply from China or Europe. So we had talked about it earlier also. So roughly, I'll say around 400 crores and odd, or maybe slightly more or less, has been the revenue impact in March itself. And although it's getting under control, but it's still continuing. So that was one major issue. The second issue, which was in India, was on the labor part of it. We had roughly around 30,000 labor, and they are down to 15,000 now. At the peak, they had gone down to 12. A combination of Holi and all that, but I think the biggest impact was on the elections in Assam and Bengal, where all the labor went back, and they are still not yet back. Few of them have come back. So I think we have got 1,000 people coming back. I think that was one major issue which was there. So these two factors sort of combined. And I think the third piece is that Q4 was slightly weak in terms of the India performance also from the transmission. Because if you look at the way the orders were awarded during the whole year, H1, there were quite less order intake in terms of India T&D. And that's why there was a slowdown in H2 a little bit. And secondly, I think with all the discussions on gridlock, what happened was that there was a huge focus on completing existing projects. A lot of resources were diverted towards completion of the existing projects, leaving a little bit less focus on startup of newer projects. I think to me these are the 3 major factors which led to a pretty subdued quarter 4.
Well, just that labor, the numbers, if you can just run us. What is this is for India, right? The labor issue?
This is for India, basically civil. The transmission needs to be added also a little bit, but in the civil, we had roughly around 30,000 people, down to 12 in April, or in fact, starting with March, because March people first went for Holi, then they did not return because of the SIR exercise and the elections. And even today, we are at 15,000 against the requirement of 30. Wow. So if you take an average, I'll say, I don't think that's very representative, but take an average of around 1 lakh rupees per month of revenue out of the labor. 18,000 is straight away 1 into 180 crores.
Yeah. You know? But why is that? Why is this such a big? Is this seasonal in nature?
So it started as seasonal, basically let's say on Holi and all that. Typically people go and then they come back. Holi and Eid combined. But then with the elections and with the entire pressure on voting and your name getting deleted, etc. So everyone went back. You talk to anyone in Mumbai or talk to anyone in Gurgaon, people don't have houses, people don't have security.
Yeah.
So, yeah.
You expect them to come back gradually, but surely? Or
so
maybe...
out of the 18,000 who have gone Mangalam, at least 3 have come back. The promise was that almost all will come back, but they are coming a little bit slower than what was expected. We still have a challenge even in Q1 little bit. I think they are coming back now. 3,000 have come back, as I said earlier.
Right. So in light of all of this, what can you foresee for this particular financial year? Let's break it down into H1 and H2, because H1 will still be fraught with a lot of the uncertainty that we're seeing. There's still no clarity on West Asia. And obviously with the Prime Minister's comments coming in with regards to, being a lot more responsible with expenditure, etc., do you think that the government, given its current position, will also not up the ante on capex too much, maintain it?
So a couple of things. One is we have an order book of roughly around 37,000 crores and an L1 of 3,000. So I don't see a growth, let's say anything between 10 to 15% growth will definitely be possible for the year. So I think that's for the entire year. Now Q1 will definitely be weaker. I still expect that we may be flat or may have a slight growth. I cannot say today exactly what will happen. But for the year, I think we are very clear that we will at least do 10%, but it could be anything between 10 to 15%, depending how things pan out. That's one thing. Secondly, you talked about government expenditure. So basically, if you look at our order book, we don't have too much of direct exposure to government. There's hardly any major orders from the government or which come from the budget, except for the around 1,000 crores of order book which we have from water. We don't have a direct exposure that way. So I don't think we are directly concerned or would be impacted by government slowing down the capex in any manner.
Right, but not necessarily the government, but the signaling that it does, and as a result of which, it trickles down. But I take your point. You have a fairly comfortable order book, and execution is something that you're fairly confident on, 10 to 15%, give or take a quarter or two. In terms of inflows, what are you targeting this year? And if you could break that up from T&D, from railways, from the civil, which accounts for nearly a third of your overall business right now, and West Asia, where your order book is still 10,000 crore. Do you expect any more orders to come, given the challenges that are right now?
So overall, this year we were around 25,000 and odd crores in order intake. 27, we are expecting around 30,000 crores of orders to come in. Roughly, I don't have the exact break of each business, but roughly T&D is expected to be around 60%. So around, let's give or take 18,000 will come from T&D, and around 8,000 would come from our civil business. And the rest would be divided between, railways, cables, and renewable business. That's a very broad breakup, I'll say, on the order intake. As far as West Asia is concerned, you're right, we have an order book plus L1 of roughly just about 10,000 crores. And today, we have got a large pipeline of tendering, both in all three places. I'll say we are in Saudi. There are continuous tenders coming up. Then there are UAE, again, bids are happening. There's some large interconnections are going to come now, and Oman. So all the three countries, we are seeing a continuous flow of tender pipeline, tenders happening. So I don't think we are factoring in any slowdown in that business today. I think we have to keep in mind a couple of things about West Asia. What we are also seeing is there are going to be, and we already done a couple of, some rehabilitation orders coming in. Then there will be orders for redundancy. We're already hearing that talk of, do they want to build another channel, between Saudi and, let's say, Bahrain. So there will be a lot of these things coming up on the transmission side also. And third is with whatever problems we have seen on fossil, we are clearly seeing a lot more push on the renewable side, which will lead to renewable as well as T&D.
Just two quick numbers before I let you go, Mr. Kejriwal. One is on your tender pipeline. If you could give us, quantify that, what is your West Asia tender pipeline right now? And as a result of which, how much do you expect to win this year? And the second number is on margins. No problem on execution, no problem on orders, but obviously costs have increased, labor availability is an issue. So all these things would have a negative impact on your margins given the sort of raw material price inflation that we've seen as well, right? So on your margins for FY27 and the tender pipeline that you have for West Asia, two numbers.
West Asia, I think it's around 25 to 30,000. 30,000 crores is a tender pipeline today. When I say today, it's for the tenders which we have to quote in the next couple of months. I'm not talking about the annual pipeline. That's number one. Margins to me today, honestly, is very difficult to quantify. Very, very honestly, today, difficult to quantify. We are in touch with most of our clients, especially on West Asia, where the costs are going up. India, and so we are receiving positive responses. I don't think we have received a confirmation of any one of them as of now, but they are willing to help you on cash flow. They're looking at it. It also depends upon what sort of force majeure clauses you have in your agreement with them. Labor cost in India is going to be a bit of a challenge because that is not typically not passed through except when tenders are linked to WPI. So wherever they are WPI, etc., you'll get a pass-through in cost. But otherwise, there could be some impact of the labor costs on your margins, definitely.
A couple of 100 basis points?
No, not that much. I see, if you look at a typical civil project for me, labor would be around 10 to 12% of my total project cost. Okay.
All right, take that point. Thanks a lot. That's given us enough to think about and ponder on as we move forward as well. Always a pleasure speaking with you. With that,
thank you, Manglam.
Let's welcome Dharmesh Kant, Head of Research, Chola Securities. Dharmesh, you heard the management of KEC International on T&D, on CapEx and all these companies. What do you foresee as the opportunity from here on in terms of order wins, in terms of margins, the labor availability, and are there any investable ideas which look compelling at this point in time?
Good morning, Manglam. Thanks for having me for the show. I mean, whatever I heard was more of a concern on FY27, be it, input cost or the labor cost and execution and the order wins. So everywhere it was a caution given by the management I mean, he was not willing to put a number onto the growth guidance, and it was a hopeful growth guidance of 10 to 15%. So it's again a very vague and a wide range of guidance which has been given. So what I expect is once the price correction happens, the valuation comes into a radar of say 25, 27 times 1 year forward PE multiple. From there, a call can be taken. But this year, as you know, the situations prolong and get extended, is likely to be a tough year. And secondly, during the onset of monsoon, most of the labor problem won't be, coming back because they stay back for cultivation and sowing. So this problem is likely to continue into Q1. So Q1, avoid all such companies, wait for the price correction and more clarity to emerge before taking a call on these products. And copper prices, Nigel has been repeatedly pointing out, it's still towards the sky high. 51% kind of a price appreciation has happened in copper in CY25 and year till date, both put together.
Got it. Okay, all right. Hi, Dharmesh. Good to hear that you're tracking my commentary on copper as well, and hopefully we get the management of Hindustan Copper, to understand what's the way ahead. Let's talk about a couple of other stocks. Vodafone Idea, the stock has seen a big pop-up in the last few days. Now, the fundraise has been announced, maybe short of some estimates. What are you making of it?
Yeah, I mean, it's a mixed kind of a set of numbers which was given by Vodafone Idea. But the silver lining has been, one is there has been upliftment in the outpost. 174 they have gone to in a challenging environment where the Jio platforms and Bharti was unable to lift that despite of our data usage growth. The second good point where the headroom is there, per user GB data per month is around 20.3 or 5 GB for Vodafone Idea, whereas Reliance does 42.3 GB per month per person. So there's they are 50% lower than the usage of GB. As 5G rolls out, I mean 17 circles they have already been rolling out, and ease on the financial burden, they will be able to roll out more products like OTT and the other players. So this will give them a leeway on the output side. So it may touch, even if it touches 200, they are better off. And this quarter numbers, if you look at closely, the operating profit was almost at same levels as the interest cost burden. So that takes care of the cash flow to a larger extent. So to my mind, if you are willing to take a bet on Vodafone Idea for say 3-4 years, and I mean survival is definitely guaranteed for this company. So this fundraise and more product rollouts will see value appreciation coming in. So if you're long term, you're willing to take that chance, then definitely 10, 11 rupees or 9 rupees is a good price point to get an entry into Vodafone Idea.
All right, take that point, Dharmesh. Just take a short break, come back. We'll continue our conversation with you. And also we have with us Mitesh Thakkar and Sudarshan Sukhani for the technical trades as usual. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. Well, we are bracing for a bit of a soft start. Crude oil prices are elevated, bond yields as well as spiked up, and the dollar index is stronger. Not a great combination for Indian markets, but let's see how that goes. For the time being, let's hop across to Hormuz. He's joining us to tell us some of those big movers on Friday and some of them that were backed by Delhivery. Hormuz, morning.
Morning, Nigel. And earnings reactions have been the ones that have been on the extreme all through last week. And Muthoot Finance was one such name among the top F&O losers on Friday. The stock was down almost 6.5%. It was the biggest single-day fall and volumes for the stock in the last 3 months. And in fact, the stock has been underperforming. It's down in 4 out of the last 6 trading sessions. On Friday, we had over 50 lakh shares that were traded. That is 8 times its 20-day average. And 40% of those shares on mark for delivery. So even on the delivery front, the total delivery volumes of 20 lakh shares, which is almost 7 times its 20-day average as well. It was among the most traded Nifty 500 stocks on Friday and down almost 20% from its 52-week high, which is well over 4,000 rupees. Saregama has been one name that has been continuing to surge higher after its results that were reported last week. The stock is up almost 25% in the last 2 sessions. In fact, Friday's volumes were double that of Thursday. The stock had seen double-digit gains on Thursday and followed that up with a, say, 8% up move on Friday as well. But the volumes on Friday were double. Close to 10 crore shares were traded, the highest on record. The 20-day average is only 22.5 lakh shares. Only 3.5% of those were marked for delivery, of course, because of the large elevated volumes as well. So 33 lakh shares for delivery. The 20-day average is only 2.5 lakh shares. In fact, it was the most traded stock on the Nifty 500 on Friday, and the turnover of over 4,000 crore rupees was well above its free float market cap as well for Saregama. And lastly, Welspun Living, similar to Muthoot, but on the positive side, gaining the most and volumes in the last 3 months. A positive reaction to its results. Over 1 crore shares were traded, 5x its 20-day average. A third of those were marked for delivery, so 33.5 lakh shares traded. Here too, almost 5x of the delivery volumes as well on the 20-day average front. And the stock has been up almost 12-13% in the last 1 month, as a result of which it has turned positive on a year-to-date basis as well.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's go across to Ekta. She's here to tell us a little bit about Dr. Reddy's as they've launched semaglutide in Canada. Morning, Ekta.
Morning. Well, yes, the big launch has taken place. They've launched semaglutide in Canada. It is estimated to be a $120 million opportunity for them. The market is expected to remain largely 3 players for the next few months. So this includes Novo Nordisk, which is basically the innovator of the drug, as well as 2 generic players, including Dr. Reddy's. Remember that the Canadian market is split broadly into public, private and cash markets equally. And the healthy launch volumes are expected despite pricing pressure as per analysts. So for the first 2 quarters at least, Dr. Reddy should be making a good amount of money coming in from the Canadian markets and the semaglutide launch, according to analysts. Now, OneSource would also be in focus because they are the sole supplier to Dr. Reddy's for semaglutide in Canada, and they are also the suppliers to the second company which is slated to launch the generic version of semaglutide in Canada. So that stock would continue to be in focus.
All right. Thanks a lot for that, Ekta. We still have Dharmesh Kant with us. Dharmesh, what's your thought on the pharma space? Because it's been outperforming and, the street believes that better for pharma is ahead of us. And now that in absence of, IT being a strong mover with a weaker rupee, it also acts as a beneficiary of a weaker rupee, the pharmaceutical space. Do you think there are better opportunities here, even after the outperformance that we've seen in some of the stocks?
I think, Bangla, it's more of our trade which is there for the pharma sector. I mean, it's the other sector which exports around 60 to 70% of the products overseas. And definitely the currency tailwind will play to their favor. But we were looking at aggregate numbers for Q4. There we are seeing a degrowth of 3 to 5%. So on aggregate basis, there has been a degrowth. For individual, there are stocks where things can look, on the brighter side. And to my mind, too much has been made about semaglutide, medicine. There are so many competitors out there. So eventually, down the line, 3 quarters, 4 quarters, it will be more of a rationalization and return to mean levels for most of the companies. So not very gung-ho about these product launches. But having said that, I mean, one can definitely look at, say, a Lupin, which came out with stellar set of numbers. All 3 quarters were very good, though the stock price did see correction post, numbers were announced. So there's a good opportunity out there, and Arvind Pharma. These are the 2 companies where I think the valuations are still, on a comfortable side compared to the numbers which they have been reported, and the currency tailwind plays in their favor. But this is more of a trade to us rather than a structural bull trade.
Just picking out some of the big movers from last week, Dharmesh, hi, morning. Keynes was down 30% Friday to Friday. Pine Labs, there was a big block, 23% down. Kalyan was down 18%. And there was a Torrent Power, which was down 15%. This is all last week. Anything strikes out to you?
Yeah, good morning, Prashant. I mean, see, why this all stock price reaction happened was because of the management guidance, which was revised, quite drastically. If a year back, all these companies were talking about 40-50% kind of a growth playing out. And suddenly it drops to 30% or 25% with a shaky kind of texture to even 25-30% kind of a growth. Plus the input prices for most of them, like Keynes and all, they have been up. And Keynes, for example, Keynes, they were unable to meet their guidance for Q4. I mean, you guys have highlighted that very strongly out there. So these structural, headwinds are still there. Not very bullish about that. One stock which can, again, this is a chance which one has to take is the Dixon Technologies, though the guidance has been 12 to 15% if Vivo deal doesn't happen out there. But in case Vivo comes through, then definitely this company will go to 30% kind of a growth trajectory. And then I think the pricing will become more of a palatable kind of a pricing. So Dixon is which we are watching closely. In fact, on decline days, we are recommending our clients to get some buy into that. But structurally, I mean, the entire industry, whatever guidance are coming, we are seeing re-rating on the degrowth side on the growth guidance. So, bit careful about that.
All right, we'll take a break here. Thanks very much for that, Dharmesh. Really appreciate your time. It's always good speaking with you. We'll come back with more, 2 minutes, by the way, to the pre-open rates on the equity. And, of course, the dollar rupee opens up as well. So that in focus. Rakesh Arora of GoIndiaStocks.com joins us on metals. And, of course, other stuff as well. Stay tuned, coming up. Okay, welcome back. There's just sort of, starting the day with first rates coming up on the equity and the dollar rupee as well. But look at the dollar rupee first. So 200 points lower. This is in line, about 0.9% down on the, GIFT Nifty. The dollar rupee will come up with the first rates. So 96.1650. So about a 0.25% down to begin today's session, straight up. So that is, I guess, the first indication. I was talking to somebody, just anecdotally, I was talking to somebody in the rupee rate space, and I'm paraphrasing, but pretty much the gist of what he said. He said, well, we've never got so much importance in terms of the attention of the market focused on what's happening on the dollar. In terms of a firm view, is there one? I guess not. In terms of how this is going to play out from here, it's just the global screen which needs to stabilize, but just the focus is immense at this point. 96.17. Well, Mitesh Thakkar is with us of Bonanza, and Sudarshan Sukhani is with us with their technical trading ideas. Gentlemen, good morning. Great to have you with us here. Sudarshan, you go first. How are things looking? I think the indicative open is about 100 lower. What are the trades on the index first?
Yeah, good morning. Well, things are not looking good. We went and rallied and then faced significant resistance around 23,800, which was the resistance zone. We've retreated from there, and now world markets are not supportive either. So the chances are that we will look for lower levels. There is a trade in the Nifty. Unfortunately, it's on the short side. Consider taking a short position either by buying puts or selling calls, depends on the trader. But take a short position in the Nifty. The stop is relatively wide at somewhere 23,800, and look for a decline towards 23,300 or 23,200. So there is a short trade. I don't give it often, but today it's there.
Okay, all right. There's a trade on the short side. Interesting one, Sudarshan. Before I could ask you if it's time to be brave, you shut me up. You said, nope, it's time to get short. Either get short or buy puts. Mitesh, what about you? What's your take in terms of the index move? By the way, we're likely to start off with a cut of 150 to 200 points as well. So keep that in mind.
Good morning, guys. So I think on Thursday, since Friday I was not there, Thursday I was talking about buying into some put options given the fact that 23,800 would be a difficult hurdle. And we did get a high of 23,840 on Friday, but we have kind of, failed to sustain above that. My sense is that a retest of 23,350 is definitely a stronger possibility. And in case we start breaking below that, 23,100, 150 is my target. Similar to what Sudarshan gave, I think 100 points lower. So, yes, I think, in that sense, I would agree. I think we've already have some kind of put spreads on the Nifty for the May expiry, and therefore the immediate outlook on the index is slightly on the negative side.
Right. Individual stocks, what do we do there? Mitesh, let's start with you first.
Yeah. On the stock side, also in line with the index view, I have more of sell calls. So IRFC is a sell with a stop at 100 half for a target of around 95, 94. Chola Finance is a sell with a stop at 15.61 for a target of 15.15. And also a sell call on Godrej Properties. Keep a stop about 17.40 for the short-term sell trade and look for targets of 16.60. And one buy call, that's Dr. Reddy's. I think it's also in the news. But the chart structure is slightly on the positive side. So Dr. Reddy's is a buy with a stop at 13.15 for targets of 13.80.
Right. Sudarshan?
Well, I have one long call, that is JSW Steel, buy with a stop at 12.50. CAMS is a short sell with a stop above 800. CG Power is a short sell with a stop above 850, and Persistent Systems is a short sell with a stop above 47.85.
Got it. Okay. All right. Thanks a lot, gentlemen, for giving us your calls. Let's turn the attention then to the metals pack. Rakesh Arora, founder of GoIndiaStocks.com, joins us on the show. Hi, Rakesh. Good morning. Good to see you. Monday morning, the ferrous names have actually done quite well with their results. Tata Steel was good, JSW Steel was good, and SAIL was good. The pick of the pack among them, I think JSPL as well is something that you've been quite optimistic on. So what do you make of the ferrous results? And, besides that, is it time to sell these stocks or buy these stocks? They've already seen a good run.
So, Nigel, good morning. Obviously, all the steel companies have declared very good results and which have beaten expectation. And for Q1 also, steel prices are higher than what was the average for Q4 for these companies. So good results will kind of continue into Q1. But I think Q1 should also mark the peak for the margins for the near term. Valuation-wise, I think there's not too much of room. As you would have noticed that, consensus estimates, though they've tinkered a little bit up and after the results, the target prices haven't really moved much up. So valuation-wise, there's not much to choose from. So I would say that, maybe continue to hold on for another 5-10%, but look to pair around Q1.
Okay, and you'll not initiate a fresh buy. If you have a position, you just hold on.
Nigel, we are at closer to peak margins at the moment. So new position is not really recommended at this level.
Okay, quick word. We just had news that JSW Energy was the one that went ahead and sold some stake in JSW Steel. Sometimes when the promoter entity comes to sell some stake, at that time the street gets a little bit nervous. How would you read this? JSW Steel has been a stock that's been adding capacity really well. Their execution has been par excellence, but the stock trades at the upper end. It's the most expensive among the ferrous names that we discuss. Your view on JSW Steel in particular?
So, Nigel, undoubtedly, JSW Steel has been a star performer over the last, 15 years or so since we have been tracking it.
True.
And even now they have, upgraded their capacity target. So they will continue to, be one of the fastest growing steel company. Also, they are one of the cheapest producers of steel. So despite not having too much of captive iron ore, etc., they are able to do margins which are way better. So undoubtedly, JSW Steel remains one of the top, picks to look at. But as we discussed, margins would be picking out in Q1. So, need to be a little bit cautious on the upside.
Okay, all right. Rakesh, talking about JSW Steel over the many years, I recall, I think around 14 years ago or so, both of us having a cup of coffee at ITC when they did that merger with Ispat. That chat for another day. But what about Tata Steel? Some of these companies, they will see some peaking out in terms of margins. But because Tata Steel has such a large exposure to the European side of things, and now the UK's losses will come down, Netherlands in the near term could have an issue, but there is a bit of a turnaround strategy over there. From losses, probably it starts moving gradually towards the black line or the green line with regard to UK. Will you be a little bit more optimistic on Tata Steel, given their deleveraging plan as well that they have briefly spoken about?
So, Nigel, the European assets have become kind of, immaterial, I would say, from a bigger scheme of things, because Indian capacity has expanded quite a bit. And till the time European assets are converted into, more energy efficient and, away from that blast furnace thing, I don't think there'll be sustainable improvement over there. Seasonally, yes, steel prices are going up, so they would benefit. But they are not really, game changer or, driver of value for Tata Steel in a big way.
Got it. Let's turn our attention then to the non-ferrous part of things. Rakesh, what's your view? Nalco came out with a set of numbers. It was actually a little bit disappointing. I think you all were the ones that were quite optimistic on Vedanta's demerger as well. Let's talk about aluminium first. What are you making of, the recent moves? Because now from that supply side, restrictions, I think the street is getting a little bit cautious on demand destruction as well. How do you approach the space? I think Vedanta Aluminium will be listed as well. If you have a rough range that stock gets listed at as well.
So, Nigel, aluminium, definitely it's trading at way beyond its fair value. So the fair value for aluminium is around $2,600. We are closer to $3,600.
Okay.
And as I've been mentioning in my interviews that in second half, there's almost 1 million ton of extra capacity coming up in Indonesia. And over the medium term, when I look at the Chinese aluminum producers are all moved into Indonesia. And in next few years, they are planning 10 to 15 million ton of new aluminum capacity. So I won't be too bullish on aluminum over here. I would rather, recommend to book profits on aluminum stocks at these levels.
Rakesh, hi, morning. I had a macro-ish question to link it to the metals space, right? The one macro trade which, people like Paul Tudor Jones and others, etc., here in India as well, those are the big macro guys have all had it. It was pretty strong belief, at least recently, about a week ago, and I'm sure it's still the same, is that the dollar is headed down. It started a big cycle down. That typically is a pretty constructive environment for metals broadly. Do you believe that, Rakesh?
Yeah, I mean, because all metals trade in dollar, whatever said and done. So, weak dollar leads to better realization for all the, in local currencies. So that is supportive environment. I think the bigger macro picture is AI demand. So that has been the key driver for, base metals over the last year or so. And so that is where, one needs to take a call whether, investments to AI will slow down, what is going to happen. And that is going to really drive the valuation or rather the prices of, more specifically copper from here on.
Okay, got it. Rakesh, we'll leave it there. Thank you very much for joining us. Good speaking with you. And it's a pleasure having you here. Well, I think let's just get the 9:10 calls out of the way. It's 9:11 actually, so maybe a minute late. Sudarshan is back with us. Sudarshan, what do you have?
Well, I have CG Power, which is a sell CG Power with a stop above 850.
Okay, and Mitesh, what about you?
I will choose a sell on IRFC for targets of around 95.
Okay, two cells, CG and IRFC. Gentlemen, thanks very much for that. We want to revisit Vodafone Idea, and Sud is here with exactly that. Sud, morning.
Morning, Prashant. So for Vodafone Idea, two parts. First, talking about the earnings, it was operationally a healthy set of earnings. Company has seen a revenue growth of 2.3% on a sequential basis. Even margin has improved and it has come at 43.1%. Average revenue per user better than the peers. It has seen an improvement of 1% sequentially to rupees 174. Even subscriber loss was just at 0.1 million. That's the lowest loss that company has seen in last 6 years, or say since FY20. The second part is the promoter infusion via convertible warrant. Now promoter is going to infuse around 4,730 crore, and that will be done at rupees 11 per warrant. It's at a discount to current market price, and stock has seen a huge run-up over the last few weeks. But analysts believe that this infusion is lower than expected. But following this now, what to be tracked very closely is debt fundraising. If that happens, it will be a huge positive for the company. But for now, it can be a minor negative.
Right. Thanks very much. It's run up quite a bit, right? I mean, so there is that. It started slightly lower in the pre-open session. Let's look at ICICI Pru Life as well. Yash is here to tell us why that is going to be in focus as well. Yash, take it away.
Well, a deal in another insurance company is what is having a negative read-through for ICICI Prudential Life Insurance. First, I'll speak about the deal itself. Prudential PLC has announced acquisition of 75% stake in Bharti Life Insurance. The total amount for this 75% stake would be about 4,200 crore rupees. Prudential PLC transaction will value Bharti Life Insurance at about 5,600 crore rupees. And out of this entire 4,200 crore rupees, 3,500 crore rupees would be paid as an initial cash consideration and 700 crore on fulfillment of certain conditions. As far as the valuation itself is concerned, this transaction will value Bharti AXA Life Insurance at 1.8 times September 2025 EV. As far as Prudential PLC is concerned, it will acquire about 60% of the total 75% stake from Bharti Life Ventures and 15% from 361. Now, why does this have a negative read-through for ICICI Prudential Life Insurance? That's because Prudential PLC owns about 22% stake in ICICI Prudential Life Insurance, and as per regulations, one particular promoter cannot have more than 10% stake in two life insurance companies, which means that to start this new venture with Bharti AXA, Prudential PLC will have to pare down its stake in ICICI Prudential Life Insurance by about 12%. This is worth 9,200 crore rupees, and possibly it will be done through various block deals in coming days. Also, another negative, the bancassurance tie-up with ICICI Prudential has with Standard Chartered PLC, that will also be a key monitorable once Prudential PLC moves out of ICICI Pru Life. Remember, Standard Chartered gets about 5% of the total AP to ICICI Pru Life.
All right, Yash, thanks very much for that. So first rate starting to come up anytime now. 160 down on the Nifty in the pre-open. The sensex is down about 400. So what do we have? We look at indices, look at the Nifty and how the 50 stocks are starting, and then we'll look deeper as far as individual names in the broader market go. We're down about 0.9, 24,400, 24,430. The Nifty Bank at about 53,100, 53,050. So coming up with some more pressure, 1.2 lower. The mid-cap index is down 1. The small-cap index is also starting with about a 1% cut. So uniform 1% lower across the indices, if you want to look at that. The Nifty 50 heat map will come up, gives you a sense of where we are starting. And should be all down mostly. You got JSW Steel, which is up, Wipro, which is up, Infi, WIP, TCS, and Dr. Reddy's are higher. And the IT index was down 6% week on week last week. So there is a bit of a lift coming through there, but I'm not sure if there's anything beyond that. Power Grid, Tata Steel, Shriram Finance, Adani Ports are stocks which are starting the day down. So it's, overwhelmingly lower this morning. 230 down, about 1% pressure coming through on the Nifty. Mangalam.
Well, if you look at the mid-caps, it's all earnings. If you look at some of the top gainers, we do have Hindustan Copper, as Nigel pointed out, Solar Industries as well, good performance coming in. But look at ICICI Pru Life, 8% lower. Amberent is the other one, which is down about 6%. And we are seeing some decline in delivery despite a 30% jump in revenues and EBITDA doing well as well. Ekta spoke to us about Gland Pharma. That stock straight off the bat up 10%. And we are seeing, some bit of decline in Crompton Consumer as well. Remember, Yash had broken the story on Friday of a possible deal with Ultratech. That stock currently lower by about 3% post perhaps the management commentary that has come in, reply that has come in on that. Symphony down about 7% on numbers. Bajaj Electrical is down about 6%. And jewelry stocks continue to see a bit of sell-off. PN Gadgil down about 5% as well. All in all, it's a weak day of trade, but look at Godfrey Phillips. There, it was a good set of numbers coming in. 6% volume growth, a lot of price growth, the EBITDA doing well as well. But it will be very interesting to see whether this sustains or not, because one, the stock has already seen a 30% up move in the last 40 days or so. And secondly, the management has said that FY27 will be a lot tougher than FY26, given the steep rise in taxes that we've seen. But by and large, a weak start to trade, earnings-led big moves. 2,000 stocks in the red for about 500 in the green.
Well, that's right, Mangalam. And Vodafone Idea's fundraise doesn't seem to have enthused investors because they were expecting more. So that stock, in fact, is down close to 3.5%. From the broader market, struggling to find a few winners, but I found a few. Finiotex Chemicals, that one has opened up with a gain of close to 5%. So the numbers, I think, came out there. So that stock, in fact, up and about. Finiotex Chemicals is the one I'm talking about. Cupid as well is mildly higher with some gains out there. The other one that we're looking at is Hindustan Copper. Actually, it's building on some gains, so pretty good because the street is optimistic about this year's numbers. So that one comes up for you on the screen. Plenty of earnings reactions, though, on the downside. Bajaj Electricals is down. Ratnamani Metals as well as lower. Symphony as well as lower. Mangalam had alluded to some of this. VIP, the big turnaround is awaited. For the time being, the stock has opened up on the back foot. That's down close to around 5%. I recall when the stock had deal was announced, the stock was more than 400 rupees, I think, VIP. That's seen a sharp decline. But there are some good, solid winners. Valiant Organics, that stock is up close to around 8%. Volume's not very, very high on that one. Gland Pharma up 10%. Street is taking note of those numbers. And Bodal Chemicals is up close to around 5%. Net, a weak start, but at unexpected lines, going by the kind of cues that you have. Geopolitical tensions and rising crude oil prices. Not the recipe that the bulls were looking forward to.
Okay, well, yeah, it's easier to count what's up rather than what's down at this point. Premier Energies is up about 3%. I think we did mention Gland, right? Gland is up 11%. We'll speak with the management of Solar Industries in just a while. So solar industries is up 3% as well. And by the way, solar has got very large volumes at this point. So it's a 500 to about 3% gain coming through on solar right now. So actually, solar doesn't come up like this with volumes, but it's the third largest volume-led gainer on the NSE right now. So that is the picture at this stage. Let's just look at on the downside. I think we've counted most big ones. Keynes, of course, the casualty continues, right? I think over 30% now in the last 6 days, Keynes Tech. So 3170 or so. So just a one-way outflow. Amber is down 6% now. And we've been talking about how MTAR, of course, has been an absolute ripper this year and last year. So it's still up 190%, by the way. It's just that it's pulled back from about 7,700 to about 7,000. So it's lost about 10% from the highs. That's it. But still just a absolute wealth creator starting 2025. Okay, let's welcome in Sanjeev Prasad, who's with us, Managing Director and Co-Head at Kotak Institutional Equities. Sanjeev, good morning. Great to have you with us here. Thanks for joining in. So, the macro picture, of course, is tough. To your mind, let me just start with what you think can happen. I mean, the government's taken some steps to shore up the rupee. Do you think there is more coming? The street's talking about a lot of stuff. What, to your mind, looks most plausible?
The issue is clearly higher crude oil prices and the resultant negative impact on just about every macroeconomic parameter as far as India is concerned, whether it is current account because of higher crude prices, obviously will have much higher current account deficit. For example, if you look at our own numbers, you're looking at $95 per barrel average now compared to 85, which you're looking at until last week for FY 2027. So that means you're looking at a current account deficit of 2.5% of GDP, which is about $100 billion. So that's clearly a big negative. The question is, what can the government do to fill this hole? I mean, there's no immediate remedy, right? In the sense, exports cannot go up immediately. Non-oil imports are not going to come down immediately. So capital flows are, extremely weak at this point in time. So there are not too many options left, but to somehow try and curtail demand, which the government has been trying to do through a combination of appeals to the public to reduce consumption in various ways, work from home, etc. And raise prices. That will result in some amount of more judicious consumption, I would assume, of oil. The other pain point is obviously gold imports. As the government has increased import tariffs by 9%. Hopefully, that results in some amount of gold imports coming down. But beyond that, I don't know, honestly, what else can the government do? Because you are beset by extremely tough global environment. The composition of exports, imports cannot change dramatically. So it's a tough one, right? Next steps, ultimately, the government will have to look at, how much can be passed on to the consumer in the form of higher retail oil price of diesel and gasoline, and which can lead to further reduction in some demand. But beyond that, I don't know whether the government look at more harsher measures of, a lot more controls in a way in terms of people taking out money out of the country, etc., etc.
So just two points. One, how much more in terms of price increase are you factoring in, Sanjeev? That is one. And second, not in terms of curbs, but attracting dollars into the country through maybe there was some reporting around maybe a dollar bond issuance through state entities, that kind of thing.
First of all, on the price increase, if you look at the gap between what is required versus where the retail prices are, it is actually pretty high. I mean, if you go by the government on numbers of the fact that the OMCs are losing about now 25,000 crores per month compared to 20,000 crores before the 3 rupees per litre price increase, you have to have a price increase of the order of about 20 rupees per litre. Obviously, that's not going to happen. Doesn't look like, at least in the short term. Maybe half of that, that is what we have assumed for the time being. By end of June, we have taken that assumption, but it's up in the air, right? It's ultimately the government's call how much it wants to absorb versus how much it wants to pass on to the consumer. So we have taken 10 rupees per litre. Price increase by June, 3 rupees has been done. Now, again, the issue over here is it does impact inflation, right? If you look at the weight of petrol in in the CPI basket 4.5%. So a big increase will result in higher inflation. On top of that, higher diesel prices will lead to higher transportation costs and so on and so forth. So, you have to also be cognizant of the inflation angle. So somewhere the government has to manage between pressure on the fisc versus pressure on inflation and, some pain for the households. It's not an easy task at hand, but obviously the government will have to, to do the best it can. Now, coming to other measures, honestly, Prashant, I don't know whether it is such a good idea to be raising money through bonds at this point in time for the simple reason it may not be easy to start with. For the simple reason, if you look at the fact that your 2-year GSEC rate in the US, bond in the US is about 4% now. 10-year is about 4.5%. You will have to have at least, maybe 2.5-3% premium over that in real terms for money to really come into India. So whether if you want to borrow money at 7% dollar rate, I am not very sure about that. It's pretty expensive proposition. So I think the hope is this thing comes to an end pretty quickly and oil supplies start to normalize. But assuming that doesn't play out over the next few weeks, then the government has very little option but to probably raise price a little bit more and hope that demand comes off a little bit more. And at least there's some pressure on current account and BOP on the one side and fisc and inflation. It's a combination of all the three which will get hit, right?
It's the same logic for a like a 2013 style FCNR, right? Because it's too expensive. That's, I'm assuming. I mean,
expensive, and I don't think things are that dire. I mean, at that point in time, obviously the foreign reserves were far worse.
Okay.
The economy was far smaller and so on and so forth. So I don't think we need to take such drastic measures. Small, gradual price increase over time. Hopefully, will probably address this issue.
Yeah, and the 10 rupee price hike is the total price hike, just to clarify. So 3 is already done. You expect out of the 20 to plug the entire OMC losses, perhaps we will see a total of 10.
That's right, yeah.
Got it.
I mean, that's what we assume. We don't know, to be honest with you. I mean, that's assumption for now. But as I said, you have to manage between the fisc, inflation, and how much you're going to pass on to the consumer and how much the oil company can absorb, right? Ultimately, there are 3 stakeholders. You have the company, you have the consumers, and you have the government. Between the 3, you will have to, bear the burden ultimately.
So, just to get that number correct, because the government had also cut the special additional excise duty by about 10 rupees. 3 rupees has been passed on to the consumer. So that's about 13 rupees, right?
That is after the 10 rupee per day
Got that.
Liter cut in excise duty and all that stuff. Even after that, the oil company is losing roughly about 25,000 crores per month. And if you divide that by the total consumption on a monthly basis, about 12.5 million liters, you get to about 20 rupees per liter loss, which the oil companies are bearing for now.
So what does the investment environment look like to you right now, given the sort of tough macro environment that we're facing? Because, on the one hand, the government is looking at curbing demand in a way that there would be inflation, etc. The themes that were doing well are not likely to do well going forward, given, again, the rise in prices and as a result of which slowdown in the business in general. Have our valuations begun to reflect that, or there's still further downside from here?
If you look at the overall market, Nifty 50 index by itself doesn't look too bad. It's about roughly 18.5 times on a 1-year forward basis, which is quite decent. Having said that, there are 2 things you need to keep in mind over here. The first point is that earnings composition on a 1-year forward basis is looking very different from what used to be historically. A lot of incremental earnings are actually coming from some of the low PE sectors like oil and gas for obvious reasons because of higher crude prices. And from metal mining, again, because of higher global metal prices. So that is the challenge, and these are typically low PE sectors, I would assume. And second thing is a lot of derating which has happened in the Nifty is also coming from significant derating in the case of the IT sector, the large cap IT sector names. And I assume there is a reason for that. Obviously, all the worries around AI. I am not sure that goes away in a big hurry. And the other segment of the Nifty 50, which has taken a big knock, is the multiples of the private sector banks. Some of it justified, some of it probably not. Obviously, there have been pressure on NIMs in the last 12 months, given the rate cuts, more competition from the PSU bank. But at least the valuation will become a lot more attractive, I would say. But beyond that, if you look at other sectors, like the capital goods, pharmaceuticals, most of the consumer related names, autos, consumer staples, consumer discretionary, etc., there the multiples have hardly derated. So that's how challenge the market. Overall market looks okay, I would say. Not too bad valuations, but it's just coming, given the combination of earnings has changed for the worse, I would say, if I can use that term. More coming to low P sectors and also derating in some of the large cap private banks and IT services companies.
Hi, Sanjeev. Good morning. Good to see you. Sanjeev, what about the FIs? Now we have got an additional headwind for us. You've got the macros that are not looking too good. When things were not that bad, they were deserting us, selling lock, stock and barrel. Can something be done to attract them back? Because we have, numerous times over the last, 18 months, we have discussed their holding in India is dipping. The outflows have been, moving up. Is there something that can be done, to convince them that maybe Indian markets could be a better place? What is your take? What are the measures that you would recommend?
Well, ultimately FIs will come here if they expect to make money, right? So yes, valuations have become okay, but as we discussed last time, you have at least on paper far stronger earning growth in most of the other EM markets, whether it is South Korea or Taiwan, all because of the AI-related excitement, and also in, let's say, Brazil because of high commodity prices. So as far as India is concerned, on an absolute basis, it doesn't look too bad, but you have other markets which are trading at far more attractive valuation and far higher earning growth. So I don't know whether anything changes really fairly quickly, in the sense, suddenly people start getting more skeptical of the entire AI trade, which results in more attention coming back to India. So assuming that does not happen, we have to fend for ourselves. The only thing I can think of is maybe some leeway on the capital gains tax as far as foreign investors are concerned. I mean, do keep in mind the fact that India is probably the only major market which actually has a tax on foreign investors. None of the major emerging markets or DMs have actually a tax on foreign investors. Obviously, they have tax on the local investors, or that is capital gains tax. Now, whether India is going to consider that or not, it is obviously the government's prerogative. It is for the government to decide. Can that help? The current environment maybe a little bit, but as I said, the more important thing is, just the sheer excitement around some of the other markets is far higher, and India is getting ignored in the process. Unfortunately, the performance hasn't helped, right? If you look at the calendar year-to-date performance of Indian market, without 20% in dollar terms. Again, that MSCI EM is up about 20%, slightly above 20%. And within that, Korea is up 70%. It's like completely insane. Taiwan is up 40%. And you have now, 3 companies in the MSCI EM index whose combined weight is now 30%, by the way. And India's weight has come down to around 12%. I mean, one company, TSMC, is actually higher weight than India together. So I don't know what is the short-term solution over here. I mean, tax is one thing, but other than that, we only hope for better valuations and, something changing in terms of the narrative, which is currently driving excitement around other market, which is AI and commodities.
The one thing that kept us, our decline limited and has sponged the FII selling is the DII buying. With things looking a little skittish as we look forward, do you think there is a risk that comes down as well? The incremental sales that institutions have to do could get tougher, and that could provide a further downside risk or open that up?
Well, so far, the retail investor has been very, very optimistic, bullish in the market. Call it whatever, despite almost now 2 years of pretty much no return, right? If you look at the weighted average NAV of all the equity mutual funds, we have actually gone back to June 24 levels, by the way. So we are pretty much 24 months no return If you look at the NAV of small cap and thematic sectors, mutual fund that is, they are down significantly. Only the mid cap segment does slightly better. But despite that, the retail investor is still positive, which is a good sign in the sense, from a market perspective, that is. But the important thing is how long will they keep faith in the market, which has given them hardly the returns in the last 2 years now. If you look at the other way, that is the SIP returns on XIRR basis, the returns have been pretty mediocre since, I would say, now middle of 2023, by the way. If you have consistently put money in the market all the way from middle of 2023, your returns would have been sub 5%, by the way. Huh? But having said that, the retail investor is still bullish. So let's hope you see a quick resolution of the Iran-US West Asia war before the retail investor starts to get more worried.
Yeah. So basically just wait it out, right, Sanjeev? There's no other way. As you began by saying, no easy, quick remedies to correct the situation at this point. Any initiations or anything, Sanjeev, which really stands out like a shining star? Otherwise.
So what, stock, you're saying?
Yeah, stock.
Not at this point in time. I mean, there are always ideas you can look at, but it's a tough market.
They say ideas, good ideas, and they come from the depths of despair, right, Sanjeev? So, but it's got to be matched with low valuations, which I think, as you would agree, has not happened. Not to the extent that you would like or anyone would like.
See, it is there, and I would say some of the large cap space actually. Some of the private banks are actually looking very decent. HDFC Bank, let's say, if you take out the value of the non-bank business, is about 1.6, 1.7 times. ICICI Bank itself is down to about probably low 2.1 or so. Tax is about 1.6. So, the valuation-wise, they are looking pretty decent. Obviously, the concern here is that, if the war were to continue for long, then credit growth and credit cost both could, turn marginally negative compared to the current pretty decent situation. But if the short conflict, then I don't see any reason why any of the parameters of the bank should deteriorate significantly.
Yeah.
Beyond that, to be honest with you, we have to be very, stock specific, I would say, more look at the very bottom of ideas. And at this point in time, I'm actually quite okay with, let's say, the telecom sector, some of the pharma names. Slightly more, I would say, defensive tilt, where there is maybe some downside protection, but assuming things continue to be fine for those sectors, the upside is actually still pretty reasonable, for like a Bharti or Indus Tower, pharma name like Asipla. Yeah, so you can still find some ideas here and there, but it is honestly a bit of a struggle.
Okay, all right, Sanjeev, always a pleasure hearing your thoughts. Things a little bit jittery as of now. Hopefully the next time you join, well, things will be a little bit improved, both on the macros as well as for the Indian.
Fingers crossed, yeah.
Lovely. That's all we can do. Live in hope. Thanks, Sanjeev. Well, let's move on, though. Let's talk about solar industries. It reported actually a good set of numbers. It was a beat on all fronts, and even the guidance looks pretty good. To discuss this and more, we're joined by Mr. Manish Nuwal, the MD and CEO at Solar Industries India. Well, Mr. Nuwal, good morning, and thanks a lot for joining in. First of all, congratulations to the founders of the company. I believe earlier this year or a few months ago, you all were conferred with the Padma Shri Award. So congratulations to you, the entire family, as well as the team at Solar Industries. That said, let's focus on the way ahead. 14,000 crores of revenue guidance bifurcated for us. How much of that will be, international defense as well as domestic defense? If you could break that up for us. Other businesses as well as explosives. So just give us some color on that front, because we have that 14,000 crore number. For defense, on the whole, we have it as around 4,500 crores. But split it up for us between international as well as domestic.
Yeah. So out of total 14,000 crores, we are expecting that international business should grow by around 35% and should cross 5,000 crore revenue mark. And at the same time, domestic should also do better. And the growth rate will be around 35%. As far as defense is concerned, we have given a guidance that this year we should cross the revenue by, say, around 4,500 crores. And out of that, around 70% will be for the international markets.
Got it. Okay. All right. Got that. Thanks for clarifying on that, Mr. Noval. Now, Coal India, they put out a release that ammonium nitrate prices have moved up. So explosives cost of production will move up as well. Will this impact your cost? Because that will be an input for you, right? And margins as well. Also, if you could help us out, what is the duration of the pass-through of these higher input costs for you? And how does it compare with in the past?
So if you remember a couple of years back when the commodity cycle started moving up significantly, so we were getting suffered because of this price rise. But of late, because of the new changes in the contractual terms, the escalation is now on monthly basis. So whatever price increase will happen in ammonium nitrate, it will be passed on to the customers. So by and large, most of the customers have that kind of contractual terms.
So it's now monthly. Earlier it was what, quarterly or 6 monthly?
Yeah, it was earlier quarterly basis. Now it is monthly. And in this special situation, we have requested and the customers have agreed to pass on either increase or decrease on 15 days basis. So we are not very much impacted at the moment.
Right. So, Mr. Noval, just to confirm all that you earlier said, your margins at this 26-27% band continue, right?
Yeah, like last year, we have achieved around 27%. And in this financial year, we just ended at around 28%. We expect that because of the improved defense business and international as well, we expect these margins to continue even at these elevated numbers.
So 28% sustains, right?
Yeah.
Okay. And this 35% revenue growth that you've guided for, nearly half of that comes in from volumes and the other half comes in from prices.
Yeah, we have given a guidance that this year we should grow by 40%, which is around, say, 14,000 crores. And mainly the growth is coming from defense. As far as explosive market is concerned, around 20% to 22% should come from price rise and around 15% should come from the volume. So it can vary by 2-3%. So by and large, explosive business should grow by 35%. And defense, we have already given a guidance, should grow up by 70% in the coming year.
Right. That's basis the orders that you have on hand and the execution that you've planned. Mr. Noval, a large part of the defense business obviously will be supported by the Pinaka as well. But I just wanted to understand the Bhargavastra, which is currently under trials. Were that to come, how big an opportunity would this be for you and by when do you expect this?
So like we have been shared on various platforms as we are developing this product, and this can be a game changer for our company and definitely will help the security, providing security solution for our country. So it's in development stage. We are expecting that in this year, we should complete all the trials and development related to this product. As far as opportunity is concerned, it is too early to speak on the number side, but definitely it will be a big boost for our company's performance.
Would it be as big as Pinaka, bigger than Pinaka? We just wanted to understand because...
So whatever estimation we can do at this stage will definitely fall short, but it will be definitely bigger than Pinaka as we move forward.
So, got it. Mr. Noval, good morning. The field trials you'll complete this year.
Yeah,
that is
we should
FY27.
complete we are expecting the trials to complete in this year. So the commercial run should start from either next financial year, maybe defer by 5-6 months. So in defense program, development cycle, whatever we have achieved is quite fast. And in next 2 years, we should reach to the commercialization stage.
Okay. And you don't want to put a number to it in terms of any indication that you have,
It's too early to give any number, but like I said, it will be bigger than Pinaka program for us.
Okay, so that's the headline. It's bigger than the Pinaka program for you in terms of the ordering you expect. For those who don't know, the Bhargavastra essentially is like it's a multi-layer micro-missile anti-drone system, right?
Yes.
Which is, so we are dependent on Russia for some of their systems. So this kind of is a replacement to that?
It is too early to speak on these sensitive issues on these platforms, but definitely this product will provide a good defense mechanism, defense product for our security solutions. So let us wait for some more time. We will speak more on this as we move forward. So our aim is at this moment is to complete the trials So that is what we are focusing at this stage.
So what is the Pinaka size for you annually right now? I mean, just
as of now, it's around 500 to 550 crores on annual basis. And one of the product under the same family is guided Pinaka rocket. We have participated in the RFP, and we expect orders in this financial year. So that will also help us to do a revenue of around 700 to 800 crores on annual basis from the next financial year.
Okay, and you're saying this is going to be bigger than that. So that's the expectation.
It's too early, but definitely it will be as big as Pinaka.
All right, Mr. Noval, you have generated a lot of wealth for investors as well, but the street will like to know what is the next course of action, right? I recall when you all started this defense business, it was very small, and now you're talking about 4,500 crores. Is there a particular scale where you'll maybe want to list this entity separately, the defense vertical? Is that a thought that's come to your mind at some scale?
We have not put thought to this direction, but as we move forward, if it is required and if it creates wealth for our stakeholders, definitely we will look towards that.
Any scale you have in mind, 10,000 crores or something?
No scale at this moment.
Okay, let's clear out a couple of other issues then. Premier Explosives, that's another small company. I believe that it's in the market. I recall many years ago, I think one of the Noval family members had bought a small stake in the company at maybe more than 10 years, 12 years ago, if I'm not mistaken. There's reports that suggested that Premier Explosives is on the block. Are you interested?
So like I said, we have already migrated from a simple explosive company to the energetic company. Now we are developing platforms on our own. So our capital allocation strategy, whatever we have made, is adopting new technologies, creating more platform-based product at this moment. So we are very much focused on these initiatives.
So you're not interested in Premier Explosives as of now. Is that a clarification?
I can't say that, but definitely our focus is towards creating platforms, new products on our own.
But you do have a 2,000 crore rupee capex plan, and you've acquired a company in northern India to strengthen your footprint also. So obviously, when all these things are happening and you are growing, this would make sense, right? I mean, you have cash on the books. You obviously have capex plans. You have growth ideas.
So let's see. We will come back on this later.
Is the valuation a problem?
I can't comment on this.
Okay. So we've gone on for a goodish bit about this. One final question from my end. For last year, I think you've done around 1,800 crores of net profit. Various brokerages believe that FY29, this profit number will more than double towards 3,900 to around 4,000 crores. Going by the pipeline, going by the way you're evolving the business, do you think it's gettable from around 1,800 crores of net profit? You move closer to around 4,000 crores by FY29.
So there are a couple of things on this point. First, like we have already given guidance that in the coming year, we should grow by plus 40%. And definitely margins will be in the same level. And if we maintain a growth of around 25% year on year, definitely we are not far off from these numbers.
Okay. All right. We'll leave it there. Thank you very much. Good speaking with you. And, the solar industry stock, I would normally say it's gone to the moon, but in this case, it's gone to the sun. 40% this year. And so it's absolutely been unbothered by what's happening elsewhere in the markets, etc. So it's done absolutely phenomenally well. We'll take a quick break. The management of Medanta, the hospital company, with us on the other side, the quarter gone by and the outlook as well. Stay tuned. Coming up. Welcome back. The market's looking tough, but I'll tell you what, the companies that we have on our program today, but you just heard from solar industries. They're largely in the, not largely, but about 35% defense. It's a company which has done phenomenally well, stock which has done phenomenally well. The next company is a hospital company, also largely unaffected by all of the tough macros, etc., secular kind of growth. So I'm talking about Medanta, and they reported a strong set of fourth quarter numbers. Revenues have seen a robust Y-on-Y growth with highest ever quarterly total income of about nearly 1,200 odd crores. Margins softened a little bit during the quarter. Naresh Trehan is Chairman and Managing Director of the company. Pankaj Sahni is Group CEO of the company as well. Mr. Trehan, Mr. Sahni, thank you very much for joining us. Great speaking with both of you here. Dr. Trehan, if I can start by asking you, sir. By the way, I see an upgrade from JP Morgan this morning, the JP Morgan analyst this morning on Medanta, on the back of the numbers. And their thesis is that, the next couple of years is going to be about sweating your assets which you've built out and not so much about setting up new hospitals. All of that has been pushed out to FY30 and beyond. So, Dr. Trehan, if I can start by asking you, sir, let's start with the Noida asset. Could you give us a sense of, when will that start to show numbers for you? When will you break even? And then go on to some of the other big hospitals.
So you see, what's happened in Noida is that we started only two quarters before, and the losses have taken a dramatic downturn in the sense that we are doing very well now. And we are anticipating that by the end of the next two quarters, we'll turn positive. So the growth rate is quite good. The traction is in the community is very good. The patient load is increasing by the day. So we don't have any anxiety about the fact that how successful it'll be. I think it's needed there. The quality that we have, by the benchmark that I want to tell you about is that 7 years in a row, we have been declared as the best private hospital in India by Newsweek International, which does a survey of 28 countries. Not only that, we are in the first 150 hospitals of the world. So we have stuck to quality. We have stuck to our integrity. We have stuck to the patient care. And that's basically our USP, that wherever we are rolling out, we are doing it with the same ethos, with the same quality of care that patients will get. So we have no anxiety about how well Noida is going to do.
And so you're essentially saying by the second half of this financial year, it'll break even. Losses have come off significantly and the ramp up thereafter. And will you go to the 20% plus kind of margins, EBITDA margins? By when?
By end of the year or mid next year, next financial years, we would hit those numbers. I have no doubt about that.
Okay.
We have a very, very robust set of doctors who are extremely experienced, top of the pile, and so there's no anxiety as far as we are concerned.
Right. Dr. Trehan, I have a slightly broader question here, and this is emanating from a lot of the research that was done in developed markets where a lot of investment, financial investment went into hospitals, etc. The cost cutting that took place for companies to generate that sort of return did eventually result in some sort of decline in the care for patients. Do you think that cycle may come about in India as well, given that a lot of PE investment has got into this place at higher valuations? So to justify returns, there would be cost cutting which would be done, and that may at some point start impacting patient care?
So you please understand, Medanta's philosophy and our way of doing work is totally related to the highest end of care that a patient can get anywhere in the world. We always have stuck by quality, and the mantra is very clear. If you are the highest value that you can provide in your services at the reasonable cost with the best results, no matter what happens, patients will seek you, and you don't have to cut costs, you don't have to cut corners, and that way the patient is your main focus. The focus is not the bottom line, but the bottom line comes very, very healthy if you take care of patients. For a long time, I've had the belief, if you take care of the patients well, with the latest technology, with respect and affordability, they'll break the door down to get to you. So there is no question that if you stick to quality, you'll do well. If you are indulging in activities which are like related to cost cutting, quality not being your prime goal, then you may have problems. So I don't think that there is any reason to have anxiety for us, because our core values are the same,
Dr.
and
Trayan,
we will stick to it.
Yeah, that was the question was not for you, but I mean, as an industry and what's happening there. Mr. Sani, if I can come to you now, there were regulations recently, right? I mean, in terms of the height restrictions on hospitals perhaps being removed, and you can sort of build higher. Is that expected to have are there implications for capacity addition for you at Medanta? Mr. Sani, can you hear me? Well, I don't think he can hear at all.
No, sorry.
Dr. Trayan, you want to take that, if you heard me?
Yes. I will answer that question. So what has happened is, in the NBCC code, you could build up to 45 meters for hospitals and only put critical care and patient services up to 30 meters. Rightfully so, the code has been reworked to say you can go up to 60 meters and your patient services can be up to 45 meters, so that this leads us to be able to increase capacity in our projects that are coming up. And we always have this whole plan to optimize the kind of technology that we put in. If you can amortize it over a larger patient base, it actually brings your cost down. It increases your efficiency. It increases the ability of the patient to get prompt services, and it also obviates the need of cutting costs because you amortize it over a larger base.
Yeah. So
it helps. Definitely helps.
It definitely helps. But too early to kind of tell us if this is in your. Are you going to be sort of using this straight away? I mean, now that the code has changed, say for example in Gurgaon or elsewhere.
Of course. No, Gurgaon is already 60 meters.
Yeah.
But now as you know, we have 4 greenfield sort of hospitals coming up, which you know about. One being Varanasi, the other being Guwahati. There is in Delhi and also Mumbai. So all these, the replanning of all these hospitals is being done as we speak, because it only increases the efficiency of these projects that are coming out of the ground now. So it will help, most definitely. It will also improve our ability to provide the services to a larger base of patients. Right. So, as you know, we have an aging population. We do have demands going up, although we are making efficiency more and more the core of how you serve the patients. And also the fact that with the newer technologies, the patients can be served better with less invasive procedures, and that is where the growth is coming for all of us.
So when you Dr. Trayan, when you replan across 4 hospitals, in terms of just say bed additions, what are we looking at now with these changes compared to earlier? Because you said you will replan with these relaxations which have come in.
So we will have, like we are about 3,600 beds today. In the next less than 4 years, I would say, we will be close to 7,000 beds. So it does help us to add another 600-700 beds that were what we were planning according to the old rules. So this will help, and then we have many other areas that we are looking at. So it will help to provide the services at a lower price point to the people because of the efficiency that will increase in building more number of beds and spreading the cost over very expensive equipment. As you know what's happened to the dollar.
Right. We take that point. Thanks a lot, Dr. Trihan, for joining in. Mr. Sani as well. Unfortunately, we couldn't speak to you because of the audio issue, but wish you all a very good luck for the expansion plan and the path that you're on. And regulatory changes obviously helping you increase your beds by about 600 to 700 as against earlier anticipated. But let's address the news of the morning. JSW Energy has sold stake in JSW Steel, which is a CNBC-TV18 news break, which is confirmed 2.5 crore shares via a bulk deal. Sharath Mahindra, who's a joint managing director and CEO at JSW Energy, joins in. Thanks a lot, Sharath, for joining in. 2.5 crore shares. Can you, tell us why exactly did you do so? Because this gives you a gross proceed of close to around 3,150 crores. Is it because of debt reduction, or is it because you wanted to, raise some cash for your own capex? If you could give us a sense, the rationale, and are there any other assets that in the coming days we could see you monetize?
Thanks. Yes, see, it has multiple reasons. This is basically a strategic disinvestment. Actually, this value, our holdings in JSW Steel shares are sitting in our net worth for quite some time, which has not been giving the returns except the dividend. So actually, sale of our shares in JSW Steel actually provides us the capital and which will pursue to our growth plans, and also to ensure that improved return on capital employed for us going forward. And also actually this will result definitely in the debt reduction also. When we closed the year, the debt level, the debt was in excess of 68,000 crores. This reduces by, which improves our debt to EBITDA numbers also by more than 30 basis points, which brings us more comfort and gives us a headroom to continue at the momentum, our growth momentum.
30 basis points is not a big move, right? I mean, your net debt was close to around 64,000 crores. You assume that net proceeds from this, ex of taxes, etc., gross proceeds is close to 3,150 crores. Net proceeds would be to the tune of anywhere between 1,800 to 2,100 crores. That still doesn't move the needle much, right? What are the further debt repayment plans?
See, the thing is, we are right now, when we ended the year, if you see our net debt to EBITDA at about 5.96 number, and if we remove the construction work in progress related debt, we are at a comfortable level of 5.2. That is how the rating agencies also see that the work in progress, which is the debt related, is going to give the returns once the project gets commissioned and capitalized. So we are comfortable, but yes, as we have earlier said also, going forward, continuing the growth momentum, and by FY30, to this ratio to be, including the construction work in related debt, to be debt to EBITDA levels of 5, which is a comfortable level which we feel in an industry which is 3:1 debt to equity business, wherein you have to maintain the growth momentum.
Right.
So we feel that this proceeds which we have generated will definitely give us a comfort, and the leverage will definitely be down.
All right. And any other quoted, unquoted assets, investments, non-core investments that you have which you believe you will monetize over the next few days?
Not really. Nothing. We don't have.
All right. And you spoke about growth, right? But there are still a lot of concerns around renewable energy, capacity addition, timelines. What is the quantum of capacity additions that you've targeted in FY27?
Yeah, before we start, we see that we started the year FY26, which ended at about 10.8 gigawatt, and we ended the year at about 13.4 gigawatt, adding about 2.6 gigawatt, both organic and inorganic. And this entire growth was in the renewable energy space. 1.3 gigawatt through acquisition, and 1.3 were our own greenfield projects which got commissioned, which are available for the FY27. In FY27 also, we have started the year well. We just informed the market 2 days back that in first 40 days, we have added 250 megawatt of capacity, which is all RE capacity, wind and solar combined. And we will continue this, and we are looking for a capacity addition in the current year, FY27, of almost 3 gigawatt.
And, you did speak about no further sale of assets, but you still want to improve your debt position or your net debt position. A part of that could also be through fundraise. And you have, perhaps an enabling provision for a QIP. Do you have the timeline on that? Is there an update on it?
No, we are evaluating. That is the reason in January we have taken the board approval and the shareholder approval for raising funds up to 10,000 crores through various means. So we are evaluating. But right now, if you see that we started the year with almost 10,000 crores of cash with us. So we are comfortable to continue the capacity addition what we have planned in the year. But yes, we continuously, we evaluate the market, and when we feel the timing is right, we will definitely be coming for the fundraise.
Sorry, the board resolution lasts for a year, right? If I remember correctly.
Yes,
so
correct.
By when do you, decide on whether you want to raise this or not?
See, this is the approval which we have is till December 26.
Right.
So maybe prior to that, and in case we feel we don't need, then we can definitely go back to the board and take the extension. But we are evaluating before December, whenever the market is right and when the needs are there, we'll definitely be, we are looking seriously on this.
Where do you feel, you should be? I mean, do you think you will raise it, or do you think you will extend it? The reason why I ask is not because whether you need the money or not, because also the market is a little iffy right now, right? So for the same 10,000 crore, you'll have to give a lot more equity than what you would have to if the market was in a better position.
Yes, see, the thing is, definitely, as we see that we have given the guidance of reaching net debt to EBITDA of almost 5, and we know that we are right now, after this bulk sale of JSW Steel shares, we are still in the range of 5.67, 5.68. So we feel that there is definitely a room where we are working on to further go downward and without compromising on the growth momentum. So definitely we are looking for the right timing, and as I have indicated that maybe before December, we are definitely looking for a fundraise.
Right. Thank you for joining us, Mr. Mahendra. Prashant here. I just had a more basic kind of I'm just pulling back a little bit and looking at the bigger picture here. So it's for you, sir, in terms of the fuel mix, how much is thermal?
See, as I told you that in terms of capacity, we see that 13.5 gigawatt capacity. Now, in fact, when we have added another 250, so close to about 13.7, 13.8 gigawatt, 5.7 gigawatt is thermal capacity in terms of the megawatt capacity. But in terms of generation, if you see, it is still about close to about 50-50 generation because of the lower plant load factor in the RE space.
And in RE, what is the mix in RE?
In RE, the mix is that we have hydro power also. We had just commissioned on 7th May first unit of 50 megawatt. Including that, we are close to 1.7 gigawatt and about 6.1 gigawatt of wind and wind-solar hybrid all put together.
I see. The question I had essentially, Mr. Mahendra, is, and this is not about you, but basically for anyone who operates coal-based power plants, right? There's a bit of a mismatch here. Not mismatch, I mean, I guess everybody goes through the same, other countries will also go through. We have a lot of renewable capacity, solar especially, which is coming up, right? I think about 155, 160 gigawatts already there. More is being added rapidly. So daytime, even now, when you see daytime demands peaking, right? The peak during the day hitting new highs, etc. It's not a problem because there is so much renewable. But the point is, we don't have battery to store that power in the evening. So evening you need coal, evening you need thermal for base load.
Yes.
So how is that? And then at some point there'll be enough battery capacity, etc., which will come up. So what is essentially going to happen to the coal-based power plants? I mean, in the interim as well, because you can't shut down coal plants during the day and then operate them during the night. So there is that transition mismatch, whatever you want to call it. Yeah.
Yes, this is very correct. We are seeing that when the solar peak is there, the generation between say around 11:30 during the daytime till about 3:30, the solar is at its peak. When we have also witnessed last year, the industry has faced grid curtailment also. But thermal is brought to technical minimum in most of the cases to maintain the grid frequency. But that doesn't impact in terms of the revenue and all for all the companies who have a long-term power purchase agreement where the fixed cost is given based on the plant availability. But yes, we at JSW, knowing that this kind of situation will arise going forward. About 2 years back, we had done the modifications in our thermal plants to even reduce the technical minimum, which generally is said to be 55%, to bring it to even lower levels without compromising on the health of the equipments and the efficiencies. So we going forward, definitely we see, but as you have said, regarding battery energy storage, definitely that quantum has to come to take care of the evening peaks, wherein we are now seeing new peaks coming in and going forward also with almost 5% growth expected. If that continues, there is going to be even increased requirement during peak hours. So battery will take care, but we have to remember that thermal will be the most reliable round-the-clock power supply, because battery can give continuous discharge for maybe 2 hours or 4 hours. Beyond that, it is not, the economics are not favorable. So thermal as the reliable power, with country focusing now on AI data centers, where in reliability is extremely important. So thermal growth story will definitely be there.
All right, that's an interesting explanation in terms of how you're doing it. You've done it 2 years back, brought down the minimum threshold for where you operate these plants at during the day from under 55%. So that's how you're managing it. But it's an interesting space and lots of interest. Thank you very much, Mr. Mahindra, for joining us. Really appreciate your time here on CNBC-TV18. We'll take a break. We're back. Manisha Gupta on commodities and what's happening there. Stay tuned.
It continues to tread lower for the market. Is there anything in the commodity space which is worrying us right now? 100%. It is oil, which is $111 per barrel as we speak right now. Manisha joins in with a roundup of all things commodities.
Well, thank you so much for that. Well, yes, the only thing that has been trading on the higher side has been the crude oil prices. 8% of gains in the previous week, and we are trading a couple of percentage points higher in the Asian markets right now. But I would want to focus on silver as well, because remember, too many policy measures coming in from the government that has been keeping the traders, investors, and the silver industry in India quite on edge. This is, by the way, what we've done in sense of prices. So overnight has been a very strong decline that we've seen come in for silver, 8% of a cut on Friday. We've seen nearly 6% of a decline now coming in for the month of May. For this year till time, it's just about 5% in the positive that the silver prices are trading with. The last 1 year, of course, continues to be a triple-digit percentage return at around 130% there. It is about the strong US dollar index that we are looking at and the rising treasury yields, which are putting an impact on the precious metal side. So gold and silver, both of that trading in the negative right now. The crude-led inflation is yet another thing that various asset classes are watching out, and that could lead to tighter policy concerns. Remember, it is going to be the Fed meeting minutes that are going to be released in this week that the street will take further cues from. But I quickly want to get on to what the Indian government seems to be doing when it comes to import of silver. We already have reacted to duty being hiked from 6 to 15%. But on Friday night, there also was yet another notification that came in from the government where India has shifted various categories from free to restricted regime. The imports now require a government nod, a mandatory government nod, if you want to import the silver. So what really has gone in for restriction has been the 99.9% purity bars. It also is about unwrought, semi-manufactured, powder form. All of this now has been restricted. Silver is an industrial metal. Remember, we keep talking about AI and data centers and chips, etc. So silver is an important component within that as well. And that is the reason we are looking at silver prices holding around that $70-75 per ounce mark. Pardon me. What India also has done is that it has, after India has restricted those imports, we've seen Indian markets see a premium. Till last week on Friday as well, it was a discount of around $12, but that seems to have absolutely gone away now. The policy change could shift the markets to actual physical rather than paper trading is what the street believes. And then the silver ETFs, which only accept imported London Bullion Metal Market Association bars, could be looking at some premium going forward as well. Indian silver ETFs also take Hindustan Zinc Limited, Silver Refinery, which is the MMTC, and Hindustan Platinum Association. So all of that silver is also accepted by the silver ETFs. But going forward, with the kind of premium that we are looking at into the spot markets, this perhaps could be an issue going forward. That's exactly what IBJA also says. They do say that banks, qualified jewelers are no longer permitted to import silver bars without a valid license. Also, there is no restriction, by the way, on silver dore import and import of silver granules, as it were. Anyone dealing and accepting only imported silver bars would have tough times, is also the statement coming in from IBJA right now. So as I said, from a discount in the previous week to a premium right now, with so many restrictions coming in for silver imports, it's something that the street will watch out for.
All right, Manisha, thank you very much for that. We will take a quick commercial break here. We come back with the management of Arvind to discuss the fourth quarter performance. We're back in just a bit from now. Stay tuned. Welcome back. I mean, you know, it's a tough-looking screen, but there is things which are starting to move around as well, and market breadth, etc., which is completely one way down. Some signs of life, or if you want to call it that. Amber is taking a hard knock. I mean, just to highlight something which is down 15% on huge volumes, and we'll have more on this coming up in a bit from now. Well, Arvind is with us as well now. Arvind reported numbers. Growth was strong, led by margin expansion across the board. The company is guiding to a 20% CAGR kind of growth after the Dalco acquisition. We had the Arvind management, after the Dalco acquisition, they told us that Dalco gives them about 1,000 crores in revenues with about 17% EBITDA margins. Puneet Lalbhai is back with us, Vice Chairman at Arvind. Puneet, good morning again. Thanks very much for joining us. Prashant this side. Just a quick word on the numbers, right? Advanced materials margins has progressively inched up. Could you give us a sense of what's helping this margin expansion and what's the outlook going forward for the segment?
So if you look at the advanced materials business, this year, this last quarter, there was a very favorable product mix, which led to better than usual margins. The way to think about this business is it will grow at 18 to 20% with a 15 to 16% EBITDA margin. That's the guidance looking forward.
It'll continue to grow at 18% with a 15 to 16% EBITDA margin. But, on the Dalco acquisition itself, obviously we had a detailed conversation then. And since then, few questions have emanated as well. And obviously you were, because the nature of the deal was such immediate, that it was difficult for you to get into all the specifics. So just wanted to understand a couple of more things. Since the acquisition, obviously, even though asset-backed, is debt-funded, how will it impact your consolidated balance sheet, interest coverage ratio, credit profile in the very near term? And what are the immediate plans to leverage the synergies?
Sure. So as far as balance sheet is concerned, because this was an opportunity that came up and we had to sort of arrange the financing at short notice, we have funded it through debt. However, if you look at our last 4 years, we've consistently worked on, keeping debt at a very low level and comfortable level. And we have plans to bring it back to original level over, say, an 18-month period. Even with the additional debt, we feel we're fairly comfortable with both our interest and debt coverage ratios. So we're not that worried about debt. Synergies, the acquisition gets us into, a new area around automotive and geotextiles. We will explore to build those areas in India. We will take our filtration business to the USA, which uses the same technology. And then we will use the two sort of front-end teams to cross-sell products. So that's how we plan to unlock synergies.
And you'll be able to do so despite the current nervousness around the trade deal, right? And the geopolitical uncertainty.
Yes, I think if anything, this acquisition gives us some cover against that, because now we produce in the US and we don't believe that the trade deal, even with the peak of 50% tariffs, business went on. We found ways to continue selling. So even if there were certain unfavorable positions that come across on the trade negotiations, we will figure out ways and means to sort of address those. As of now, we don't see that as a huge challenge going forward. Geopolitical tensions, on the other hand, are another story. That's more occupying mind space at the moment.
All right. Just to complete the point on this before we move on to other parts of your business, what are the structured milestones that you have to acquire the remaining 39%? What's the preset formula here?
So the preset formula is an EBITDA multiple that's just a shade below the 7.75 that we acquired the 60% stake at. And it will be acquired in two phases, one tranche in 2 years and another tranche in 4 years.
All right. What about business now? You've given us a target on your advanced materials business, 18 to 20% growth with 16 to 17% margins. The overall business, how does that grow in the next couple of years? And what proportion of gains should we expect from the currency tailwind that has come for you?
So there is a currency tailwind for sure, but there is also a dramatic increase in input costs. So if you look at the year, it will be a story of two parts. In the first half of the year, demand is extremely strong. We have very good order books, but we have a dramatic rise in input costs across the board: cotton, yarn, dyes and chemicals, everything that is petroleum backed has gone up very quickly and disproportionately. So while currency will sort of offset some of those increases, we do see margin pressure in the first half till our pricing catches up. What remains to be seen, however, is the second half of the year, which is usually very strong for us. How demand holds up if oil prices remain elevated for any length of time. So a lot of uncertainty, very difficult to guide, on an exact number or an exact growth trajectory. But we've been resilient. We've had a tough couple of years where we've delivered reasonably good results. So we expect, more of the same, and we'll take on these challenges as they come.
Right, but just to put a bit of rails around that, I wouldn't call them guardrails, etc. Your exit quarter was close to around 2,500 crores on the top line with 12% margins. Do you believe that on an annual basis you can do about 2,800 crores, maybe closer to 3,000 crores on a quarterly revenue run rate organically? This is X of the acquisition that you've made, and margins stay around this 10 to 11% sort of mark. Given the crosswinds between both, currency as well as the increased input costs. So double-digit margin, is that a possibility?
So if I guide you towards the medium term, I would say all of that is true. We will continue to grow the overall business in double digits. Our margin should expand gradually. Advanced materials should grow at 18 to 20%. However, with such sharp uncertainty at this point in time, it's very difficult to guide for the overall year in front of us. However, the first half, despite all these disruptions, we do expect to be marginally better than last year.
Take that point. That's fair enough. Thank you so much for joining in, and wish you good luck navigating through the path of uncertainty in the very near term, but you are confident in the medium to long term. Always a pleasure speaking with you, Mr. Lalbhai. With that, we'll take your leave on this edition of Bazaar with the news that the Nifty is still down about 265 points, 1,000 points lower for the mid-cap index, the Nifty Bank lower as well. The only thing that's doing slightly better is the IT pack, which is the only sectoral index which is marginally in the green. We'll take your leave. On the other side, Nigel and me join in for Chartbusters.